obviously watching it. The nice thing about China is that we've already had a number of successive waves of COVID after the earlier peak in early February. I think we had it in the Russian border, we had it by the North Korean border. So we've had a number of sporadic outbreaks. And time again, I think Chinese government has proven so far that they've been able to contain each successive outbreak to manageable level. We never got to a very, very high level, certainly nowhere near where we were in early February. So clearly we still need to watch this, but I think at the moment I'm still assuming that they have a kind of good kind of measures in place to kind of keep it under control. I'm actually a little bit more mindful and watchful of what's happening in the US because we've had a number like 24, almost 20 states, a number of major southern states where cases are rising, and that I need to watch because although U.S. is stepping up, tracking and stepping up a lot of testing, I think the fact that we still have less compliance and social distancing and less severe lockdown measures, that is something we still need to monitor. But in China, I think, again, they have a track record of managing successive waves and then they kind of respond quickly. So hopefully they can keep this under control. But of course, we have to watch this given how important China is to the global recovery.
Oh, absolutely. Johanna, before we wrap up, I want to touch upon your strategies. You're reducing EM Forex exposure, and you're also very bullish on gold. You're targeting $2,000 per ounce in 2021.
Right. I think overall, I mean, the view on FX and duration in the short term, I think our strategists have kind of reduced a little bit, tactically reduced some EMFX kind of position, just because we're a little bit concerned about what's happening with the second wave. We've had a rally a bit in risk assets. We have to watch what's happening in U.S. election politics. So it's just a little bit of kind of tactical adjustment. Again, there's some selected currency pairs here and there. I think we're a little bit more positive on duration, kind of longer duration on bond yields in Asia. So we've extended duration in Thailand and Malaysia, or bullish duration in China. I think we've been helped by the fact that the FOMC meeting was a little bit more dovish than expected. And as I said, I think the trickiness of the virus suggests that, growth should be relatively subdued and we shouldn't really worry so much about inflation. So that can keep a little bit of lid on kind of long end yields. Obviously on risk assets, I think that the challenge we have here is that we've had, equity markets, especially led by the US, that have been pricing in a kind of a sharp recovery. And, for a while, although we were expecting US to improve, I think now that markets have caught up with sort of this improvement, I think things are a little bit uncertain now to what extent we can sustain this. I think the main driver has really been liquidity and this idea of central bank liquidity. But the debate we always have is, can fundamentals deviate significantly from asset prices just purely on liquidity? It may happen, it may be supported in the short term, but at some point we could be in for a disappointment if hypothetically we get another second wave, for example, or a big shock to economic activity. So again, we have to watch that a little bit, and we're a little bit cautious short term just because markets have run up already in earlier weeks.